Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. Today, we're diving into a collection of headlines from major financial publications, really focusing on the impact of President Trump's policies and other big market movements. You shared these sources to get a clearer picture of, well, the current economic landscape, and our goal is to really dig into these developments, understand what they might signal for you.
Yeah, it's a fascinating set, definitely. Lots of interconnected issues here. The main thread, it seems, is the pretty far-reaching influence of trade policies and, the uncertainty that creates across different sectors and markets.
Okay, let's start with the consumer mood then. MarketWatch has a piece, "Consumers feel like they're on a very scary roller coaster. That's bad news for Trump's economy."
Hmm.
It highlights a pretty sharp downturn in sentiment, doesn't it? Mentions the steepest drop in consumer expectations since the 1990 recession, since Trump took office.
The speed of that change is, well, it's striking. As the article points out, that University of Michigan Consumer Sentiment Gauge, it's hit a 32-month low. And what's really telling, I think, is that even though the survey doesn't explicitly ask about tariffs, that seems to be what people are bringing up, their main worry. It suggests a powerful psychological impact from these policies, almost like the fear of disruption is as big a deal as any actual changes so far.
Right.
And that kind of eroded confidence, it can really put the brakes on spending even before people's incomes are directly affected.
Yeah, it's not just a feeling, is it? That same MarketWatch article mentions a Redfin survey. It says about a quarter of people are actually delaying big purchases, specifically because of tariffs.
Exactly. And that's tangible.
And we're hearing it from companies too, right? American Airlines, Southwest, Chipotle, P&G.
Yeah.
They're all sounding more cautious, noting a slowdown linked to these economic worries.
Precisely. They're on the front lines, aren't they? Seeing how people are changing their behavior because of the climate. You think about airlines. Discretionary travel is often one of the first things to go when people feel uncertain.
Makes sense.
And comments from a giant like Procter & Gamble, I mean, their products are staples.
Okay.
It suggests maybe a wider belt tightening, not just big ticket items.
Okay, so let's switch gears a bit.
Huh.
Oil markets. Bloomberg has an article, "Oil Extends Drop as Trump's Trade War Pummels Outlook for Demand." Shows another angle on how these tensions play out.
Indeed. The article really lays out how the global trade war just creates uncertainty about, well, overall economic activity.
Yeah.
If businesses think demand will drop because of trade disputes, they'll likely scale back production.
Right, less activity, less need for energy.
Exactly, less need for oil. The fact that Brent crude dipped below $65, plus those weaker U.S. manufacturing numbers we're seeing, it shows how connected it all is. And the article notes this could be Brent's biggest monthly loss since 2021. That suggests a pretty significant shift in market expectations.
And it's hitting specific sectors, too, not just broad commodities. MarketWatch reports Porsche cuts outlook on China woes U.S. tariffs. I mean, for a high-end brand like Porsche to revise forecasts, citing China and U.S. tariffs hitting their U.S. business, that's telling.
Yeah, what stands out there is Porsche explicitly saying U.S. tariffs are now baked into their adjusted outlook. That big drop in China deliveries, plus the tariff issues in the U.S., it paints a picture of how these policies can hit multinationals from, well, multiple angles.
Makes you wonder about other companies.
Exactly. How many others are facing similar pressures, and what's the cumulative effect?
Okay, but then there's this Bloomberg article. J.P. Morgan traders turn bullish on U.S. stocks, but warn of pain to come. Seems a bit contradictory, doesn't it?
Yeah, it does feel like that. It's a really astute observation. It highlights that difference between, the short-term focus of trading desks and maybe the longer-term worries of economists or investors. JP Morgan's traders, they might be positioning for some good news on trade deals, maybe some strong tech earnings.
The tactical play.
Could be. But they're still warning about future pain from tariffs. Suggests the bullishness might be, tactical, not a fundamental shift. It's like maybe a short-term bounce, but bracing for longer-term headwinds still.
And that mention of Treasury Secretary Bessent focusing on deals besides China adds another layer.
Right, diversification, maybe. But the immediate tariff impact is still the big concern.
And investors do seem wary. MarketWatch again. Wave of U.S. data this week may give tariff-wary investors more to worry about. Suggests upcoming data consumer confidence, GDP, jobs could all undershoot expectations because of these tariff anxieties.
And this is where that psychological impact could start showing up in the hard data, right? Comerica Bank's chief economist is quoted expecting weaker figures. That slump in U.S. parts shipments they mentioned, that's pretty significant. direct reflection of goods slowing down.
Yeah.
If this data does come in weak, like the article suggests, it could definitely pressure forecasters to lower their outlooks, fuel more recession talk linked to trade policy.
Another reaction seems to be the dollar weakening. Bloomberg's dollar slump sends yen-franc up 1% on foreign haven demand. It says investors are maybe moving away from U.S. assets because of these policies, pushing the dollar down, boosting haven currencies like the yen and Swiss francs.
What's interesting there is how the dollar's safe haven status seems, well, maybe a bit eroded, at least in the context of these policies. JP Morgan's analysts are apparently predicting a second wave of dollar weakness directly linked to trade policies and the China rhetoric. And you see more bets against the dollar by speculators. It reinforces that feeling. A weaker dollar, well, it's complex, could make exports cheaper, but also imports more expensive, maybe adds to inflation worries. Okay, but on a possibly more positive note for some sectors, MarketWatch reports Trump to ease impact of tariffs on U.S. automakers, Lutnick said. Yeah. Sounds like measures are coming to lessen the hit on the U.S. auto industry. Reimbursements, maybe. Ford seems happy about it.
Yeah, this could be seen as a targeted effort, perhaps, addressing some blowback in a really important sector, politically speaking. The details will matter, of course. How much reimbursement, any changes to tariffs on parts. That'll determine how effective it really is.
Interestingly, while U.S. sectors might get relief, others see opportunity. Bloomberg, on Italy's Recordati. Italy's Recordati sees tariff volatility fueling M&A opportunity. This drug maker apparently sees the uncertainty and tariffs as a chance for cheaper deals, especially in U.S. biotech. They might even move some production here.
Right. It shows how disruption creates winners and losers, or at least those positioned to take advantage. Recordati thinks the uncertainty might be lowering valuations, making targets attractive if you have capital and a long-term view.
And considering U.S. production, maybe a sign of supply chain shifting.
Could be. Responding to the changing trade environment.
Okay, let's shift gears again. Crypto. Couple of Bloomberg headlines here. First, Bitcoin devotees plowed $3 billion into ETFs amid crypto's surge. BTC. Big inflows into Bitcoin and Ether ETFs last week. Over $3.2 billion. Bitcoin jumped 10%. Seems linked to optimism on maybe tariff deals, general risk appetite.
What's kind of remarkable, the article notes Bitcoin's relative stability compared to stocks during this trade war period. Bitcoin's been pretty flat year to date while the S&P 500 is down. That's fueling more talk about it as a potential safe haven, maybe like gold.
And Michael Saylor's prediction.
Ah, yes, the iShares Bitcoin Trust being the world's biggest ETF in 10 years. Very bold. Maybe aspirational given the current size difference with, say, S&P 500 ETFs.
A bit ambitious, maybe.
Definitely shows the strong belief some have in Bitcoin in the long-term future, though.
And more institutional involvement, too, right? Bloomberg again. Coinbase to launch institutional fund offering yield on Bitcoin. A fund aiming for a 4-8% annualized return in Bitcoin for non-U.S. institutions, using a cash and carry strategy.
This is a pretty big step towards mainstreaming Bitcoin for institutions. It tackles one of Bitcoin's perceived drawbacks, no inherent yield. Using that cash and carry trade, basically profiting from price differences between spot and futures. It aims to generate returns, make Bitcoin more competitive with cryptos that offer staking.
Sounds sophisticated.
Signals growing maturity in the Bitcoin ecosystem, definitely. More institutional infrastructure.
Okay, back to global markets and politics. MarketWatch. Canadian Prime Minister Mark Carney's Liberals win election in rebuke to Trump. Seems Trump's annexation threats and the trade war really played a role in Canada's election, helped the Liberals turn things around.
It really highlights that link, doesn't it? International relations and domestic politics. The article suggests Trump's rhetoric and policies towards Canada probably galvanized Canadian sentiment, helped Carney's Liberals pull off that win.
Quite a turnaround from the polls.
Exactly. Shows how international events can really sway domestic elections. Even the opposition leader asking Trump to stay out speaks volumes about the perceived influence.
And economically elsewhere. Bloomberg reports Indian firms like Hindustan Unilever, Reliance, DLF see revival in urban demand. Some positive signs in India.
Yeah, encouraging for India's economy. Demand picking up among urban consumers, seen in results from big names like Hindustan Unilever, Reliance Retail, suggests domestic spending might be strengthening.
A buffer against U.S. trade talks, maybe?
Potentially. Plus, they expect boosts from tax ops, rate cuts, a good monsoon looks positive. But, the Indian Finance Ministry is still cautious about potential spillover from U.S. tariffs. Even strong domestic demand isn't totally insulated.
Right, always interconnected. Now, back in Europe, MarketWatch highlights a German stock that's doubled this year. This German stock has doubled this year. The company just blew away investor estimates. It's Rheinmetall.
Yes, Rheinmetall. They're in defense and auto. Their defense business has seen huge growth, driving the stock up again. It's a clear example of how geopolitics impacts specific sectors. The big jump in revenue and profit in their defense division, directly linked to increased defense spending in Germany and elsewhere, reacting to global events.
Blew away estimates, raised their outlook.
Yeah, underscores the strength of that trend.
Okay, tech again. MarketWatch asks, why NVIDIA investors shouldn't worry about Huawei's new AI chip? Huawei's testing a competitor chip.
Right. But the analysis suggests it's, well, unlikely to match NVIDIA's performance. Its appeal will probably be mostly limited to China. It shows China's push for self-reliance, but NVIDIA's dominance, especially outside China, looks pretty secure for now. Plus, U.S. restrictions on high-end chip sales to China play a role too.
Interesting dynamic. And another tech angle, the Wall Street Journal exclusive. Wall Street banks sell final slug of Elon Musk's X debt. Took them 2.5 years to finally sell off the debt from the Twitter takeover, now X. The article suggests Trump's election and Musk's alignment helped sentiment.
Yeah, it's a fascinating intersection of politics, social factors, and finance. The long sell-off time shows the initial skepticism about the deal. The shift after Trump's election and Musk embracing him suggests those non-economic factors can influence market perception, investment decisions.
And the merger with XAI, increased valuation probably helped too.
Likely also made the remaining debt more palatable. Yeah. Okay.
Finally, streaming TV. MarketWatch. The future of streaming television is starting to look an awful lot like cable TV.
Oh, yeah. The T2 Palin analyst argues the cheap ad-free era is ending. Prices are rising, maybe less content, could slow subscriber growth. The suggestion is the future might look like, well, rebundling content, like cable.
Back to the bundle.
Seems like it.
Yeah.
That initial promise of a cheaper, flexible alternative might be shifting to something more complex, maybe more expensive.
And tariffs could hit the media industry too.
The article mentions that potential negative impact, yeah. Another layer of uncertainty in a market that's already changing fast.
So wrapping this up, what does this all mean for you, listening? We've seen how deeply interconnected everything is, haven't we? U.S. policy decisions ripple out everywhere. From tariffs hitting consumer confidence in oil, to crypto dynamics, to how streaming might evolve. Staying informed, considering different angles, seems more crucial than ever when you're navigating the financial world.
Absolutely. The key takeaway really is that pervasive influence of policy on the economy, on market sentiment, understanding those connections, the potential knock-on effects. It's essential for making informed decisions in this complex environment.
We'll see you all tomorrow morning with new headlines from major financial magazines.